Australia is a large country. In fact, it is the world's sixth largest in terms of size and area. Besides its large size, it has some of the most beautiful landscapes in the world. It has beaches, deserts, tropical forests, and a variety of plant species and wildlife. But in actual fact, this aesthetically pleasing landmass is in a heap of mess. If you are as surprised as I was when I discovered this, please watch this video to the end. Now, one of the weird consequences of COVID-19 is that it has actually hidden the weakness of Australia's economy. When the economy seemed terrible during and after the pandemic, the easiest thing was to blame the pandemic. Yet, as inflation figures show, Australia's economy has been weak for many years now. In this video, you will see some of the major challenges facing the country and what devastating effects they have had on the Australian economy. Let's start with the slow growth of the country's economy. Recently, the rate of growth of the Australian economy has slowed down considerably, even though the rates are not significantly low and are, in fact, aligned with what the Australian growth rate in the previous years. The problem seems to be that the Australian population is increasing rapidly. With the rise of the population, even when the GDP growth is acceptable, the per capita GDP growth shows a rapid decline. It is easy to excuse the pathetic state of the economy to the COVID-19 pandemic. But while, of course, the pandemic has had a massive impact, this is nowhere near the full story. The Reserve Bank's trimmed mean measure of inflation, which removes the erratic rises and falls, shows that blaming every economic problem on the pandemic is a grave misconception. According to Catherine Murphy, Australia's economy was already weak, and the coronavirus pandemic has belted it into recession, explaining that low-price growth reflects a lack of demand in the economy, a lack of wage growth, and a decidedly limp state of economic affairs. And from the looks of things, the economic crisis is set to continue. The latest government bond yields, which are a good estimate of future inflation, suggest little hope of inflation going above 2% in the next year. Also, the inflation figures show the impact the pandemic has had on services as opposed to goods. While the prices of goods did fall and rise a bit more than usual post-pandemic, it was nothing compared to the hit service prices took when lockdowns effectively prevented such activity. And as we continue to see the pandemic create a mess with the economic data and crazy price rises and falls due to lockdowns, it is easy to put all the blame on the COVID-19 pandemic. But when we look through the lenses, we see the same weak demand that was there well before the pandemic, still very much on ground. A weakness that is now more than half a decade long. For years, the Australian GDP growth has been fueled by immigrants. In fact, more than 50% of the population growth can be accounted for by immigrants. This is why the country has encouraged immigration over the years. Now it appears the Australian government has become wary of increasing immigration. Because, well, immigrants, who were once the backbone of the Australian economy, are threatening to bring it down today. Another problem Australia has is the extreme reliance on natural resources. Australia's economy is largely dependent upon natural resources. In actual fact, the mining for coal and minerals is the main occupation in Australia. Also, the growth in the Australian economy is largely driven by export of these natural resources. This is obviously a problem. If an economy is overly reliant on natural resources, then it is also hugely impacted by the fluctuations in the prices of these natural resources. Because, well, natural resources tend to be finite. There is a limit to the number of years when an economy can rely on them. This fact has been pointed out by Joseph Stiglitz, a notable economist. Stiglitz is of the opinion that Australia needs to focus its attention on developing its people and moving towards a service-based economy. Having a commodity-based economy can be dangerous in the face of a global recession. It would have been acceptable if any of the poor or third-world countries were reliant on the exportation of fossil fuel products like oil, gas, coal, and iron. But in the case of an expensive first-world country, it is rather disappointing. Also, since the world is moving towards safer renewable sources of energy, many other developed countries have planned to stop the usage of fossil fuels to save the environment. Therefore, Australia should also move towards renewable sources of energy. Job growth rate. The Australian government has been patting itself on the back for achieving high job growth. In 2018, the economy added over 330,000 jobs during that single period. This would have been a commendable feat for any other economy, but not for Australia. In Australia, even though the number of jobs created has gone up, the unemployment number has gone even higher. This is as a result of the rapid increase in the number of people looking for jobs. In 2018, even though 330,000 jobs were added, another 350,000 workers were also added during the same period. So, since the available workers are more than the number of jobs, the unemployment situation has only worsened. An increase in the worker population, which is fostered by the heavy immigration rate, has created a situation where unemployment rates are unlikely to come down in the future. It also needs to be understood that since there are so many workers available in the market, the Australian businesses are literally spoilt for choice. Hence, business owners can afford to pay workers very low wages and avoid increasing wages. This is the primary reason why the Australian middle class have been stuck with a stagnant wage and hence have ended up going deeper into debt in order to maintain their standard of living. Another particularly alarming situation in Australia is the household debt. It will surprise you to know that the household debt-to-income ratio is over 200%. Also, the household debt-to-local economy ratio is at 125%. This can be compared with 80% to 100% ratio for countries like Canada, the United States, and Great Britain. This high household debt is very dangerous to the Australian economy, given the fact that most of it is owed by the middle class. What is more interesting is that 2/3 of the debt is owed by the top 40% of the Australian economy. This means that the lawyers, bankers, doctors, and other professional middle-class people are the ones in debt. Since these people form the backbone of any economy, it will bear a major consequence on the country if they face any economic duress in the near future, because they will simply cut down their spending. This is the major reason why the IMF is worried about Australia. In their latest report, they have mentioned that Australia could be on the brink of a crisis. This is because of the high reliance on household debt to propel the country's economy. Also, since the Federal Reserve is going to raise interest rates sharply, it is likely that a lot of assets will face a sharp adjustment in valuation. Therefore, a lot of loans which appear to be viable now may not remain so in the future. The adjustment in valuation has already happened to some extent, seeing that the housing prices in Australia have been facing a downward trajectory since 2017. And it doesn't seem like this downward trend will stop in the future. More so, the housing problem in Australia has grown to be a complex one. Over the years, it has become more and more expensive to live in the country. Ever since Australia allowed her citizens to invest in the houses and property ownership, the rent cost of living has increased to a great proportion. Now, much of the country's capital is invested in the properties and houses. This investment in real estate has caused the rent prices to rise, attracting more people to dump their capital in the property. Advanced economy is a term used by the International Monetary Fund to describe the most developed countries in the world. While there is no established numerical convention to determine whether an economy is advanced or not, they are usually defined as having a high level of per capita income, a very significant degree of industrialization, a varied export base, and a financial sector that's integrated into the global financial system. Obviously, Australia does not meet these criteria and therefore cannot be considered an advanced economy. The bottom line is that the future of the Australian economy seems really shaky. In the past, this economy has gone over 25 years without a recession. However, it seems like the fundamentals are deteriorating and the economy could witness a fall anytime soon. Do subscribe to this channel to get updates. Also, give this video a thumbs up. See you in the comments.